Good morning, good afternoon, good evening, wherever you are in the world. We're absolutely delighted to have you join us today for this FS Club webinar, Cryptocurrency, the Parallel Financial World. This truly is a subject which, judging from the attendance and attendees we've got, is close to everyone's heart and interest, and maybe even wallet. So we're delighted that you can join us today. My name is Hugh Morris. I'm a senior research partner here at ZN, and it's my pleasure to be able to chair this event today. And I can only do so due to the generosity of our sponsors, who allow us to range widely and freely across technology, economics, and finance. So my job today is to get out of the way as soon as possible and hand over to our speaker, Cynthia Wu. Now, some housekeeping notes. The slides are available to download in the chat and on the website. We'll be holding a 20-minute Q&A at the end of Cynthia's presentation. Do use the GoToWebinar chat facility to send your questions in to me. I will then moderate the conversation afterwards. Now, due to consistent with my theme of getting out of the way, without further ado, Cynthia, the floor is yours. We're delighted to hear from you.
Thank you, Hugh, in making a very warm introduction, and thanks for you and Michael for having me here today, and Peter for put everything perfectly together. So good day, ladies and gentlemen. Thanks for dialing in today. I'm Cynthia Wu. I'm based in Hong Kong currently. So a little bit of myself before I start, so you know like all the context that I'm in. So I'm the founding partner of a crypto financial service company called Matrixport. So basically, I co-founded this startup with Jihan Wu and Zhong Ge, who were co-founders of Bitmain, which is the world's largest mining equipment manufacturer, in early 2019. And we made this company one of the fastest growing crypto unicorn in less than 2.5 years. So before I joined crypto full-time in 2018, I was working as a commodity trader in my first job, and then later I moved on to regulated exchange markets. I worked for HKEX for a couple of years, and then I dropped into the rabbit hole, and I'm where I am today. So it's a great honor to be here today and do a sharing on my favorite topic, crypto, and why I believe blockchain and cryptocurrency is an exciting and one of the greatest inventions in our lifetime that is going to hugely benefit the world we live in. Actually, next slide, please. Actually, at Matrixport, we have a motto, which is make crypto easy for everyone. So given my task today is to explain everything I know in an easy to understand way with no jargon in 20 minutes. Well, I think it's challenging enough, but let's get on and see how it goes. All right. Yeah, we can. Yeah, next slide, please. Yes. Okay, so let's start from a simple question. Have you ever thought about what makes the backbone of our economic prosperity and the countless transactions that we make every day? That's right. It's something we cannot see or gauge, but it's invaluable. It is trust. So let's take transaction to its most simple form. Imagine like person 1 wants to buy a coconut from person 2 for 10 bucks. In order to make this transaction possible, person 2 needs to believe person 1 is going to pay him 10 bucks after he passes a coconut. And also, these 10 bucks are real, not some counterfeit bills. Likewise, for person 1, he needs to trust that by paying 10 bucks, he will get what he wants, the coconut. I think we jumped to some slides. It should be the first. Yeah, this slides, yes. But to have each person to trust the other person is actually quite challenging. So people find someone they mutually trust, which is on the right, the top picture on the right. Say an elderly from the village or a leader of a group that they can rely on for the trust. Therefore, it requires less direct trust between person 1 and person 2. The mutually trusted person serves as a nexus of trust or intermediary who makes the entire system more efficient. and deals get done easier and quicker. Then, as the human society evolved, we find many different ways to make things more efficient by creating trusted entities such as banks, escrow agents, exchanges, clearinghouses, law firms, industry groups, and so on and so on. And we impose tedious licensing requirements or ask for a large paid-up capital to make these trusted entities legitimate and trustworthy. Because now the entry barrier is high, so does the stake to do harm. And these entities become important intermediaries that act as a nexus of trust of our modern society and tie huge amount of transacting parties together and make numerous deals happen every day. But at the same time, these intermediaries over time, they themselves became the point of vulnerability or the center of bureaucracy. Some even enjoy a status of too big to fail or get bailed out when they default, which in other words means we, as people, as ordinary citizens, have to live up with their inefficiency or even deficiency and end up paying for them. This became a paradox. Next slide, please. So, is there a better way? I'm sure many smartest people in the world are searching for the answer to this question. In the end, Eureka! In 2019, we found solution in mass. Satoshi Nakamoto invented a P2P cash system in 2019 and called that Bitcoin. And at the same time, he invented a system called blockchain. The idea of blockchain is exactly to remove a trusted party from the equation and replace it with a trustless network, blockchain. So what is a trustless network? In the simplest language, it means the network does not rely on trust to operate. Person 1 can send money to person 2 without even knowing who the person 2 is. Blockchain has many traits. Next slide, please. Okay, so some of the traits I have listed on the left, right? So the first trait, as we often see on the newspaper, on website, is distributed. So distributed ledger is a database that is consensually shared and synchronized across all ledgers, right? There's not only one ledger, there's many ledgers, and it's synchronized. So it allows transaction to have a public witness. The participant at each node, i.e. ledger of the network, can access the database shared across that network and can own an identical copy of it. Any changes or additional amendments made to the ledger are reflected across the network and copied to all nodes that's in the network in a matter of seconds or minutes. And the second trait is trustless, as we just explained, right? It does not rely on trust. It's relying on mass. And that's a capability of the ledger in solving the mass problem fastest. Then they will have the right to basically make the next block. And the third trait is immutable, which is also a very important trait. That means you cannot change what happened before, right? Nor you can change the sequence of the prior transactions. What happened on the network is forever recorded as the way it is, and the record is shared among all nodes on the network. So there could not be a malactor who just wants to change it at its own will. It's not possible. And the last important trait is decentralization, decentralized. So the network, the ledger is not run from a single location. Instead, the ledger can be run from anywhere in this world, right? Can be big or small, which create a decentralized network that's free from centralized control. And even cryptocurrencies monetary policy work in a decentralized manner. Like, for example, the work of the Bitcoin miners, for example, involves verifying and validating the transactions. But it also ensures the new Bitcoin are added to the system at a predictable, steady pace. So Bitcoin's decentralization gives a very robust and secure system free from centralized manipulation or abuse, right? Okay, so next slide, please. Yeah, So that technology has many traits, and we call it blockchain. And now let's come back to the example we made just now, right? The idea of person one send money to person two. So in Bitcoin network, this is how it happens, right? This is a summary of a transaction in the Bitcoin network. So if person one wants to send money to person two, he needs to include person two's public key, which is equivalent to person two's account number. It's like the equivalent of bank account number of person two in the blockchain world. In this transaction, he needs to include a bank person two, so the recipient's public key in the transaction, and also he needs to sign the transaction with his own private key. Private key means that it's equivalent to like your password of your bank accounts in the crypto world. It is a proof that you own and control the funds. All right, so you have to sign with your own private key, and also this transaction includes the hash of the previous transactions, which actually contains a summary of all previous transactions that ever happened before this transaction, and that record cannot be altered. So with these measures, person two can be sure that when he receives person one's fund, it's really from person one. It's really sent from person one, and the fund is real. It's not double spended. See? So with this technology, we're actually solving this problem, right? A trustless payment network is now made possible. Now everyone, now we all know that how these things fundamentally work. Can we turn to the next slide? So the next question I often get asked is that why crypto has value, right? It's easier to explain now if you can understand why trustless network has value. Because trust is expensive. If you can create trust in a trustless way, you are eliminating the expensive intermediaries that act in between and lower the friction of transactions. You can make transactions that would not otherwise happen before happen now. So this is a value of trustless of blockchain, and this alone means a leap forward of efficiency and productivity. So to understand why crypto has value, it's very important to understand what value it provides, right? The first is that it's decentralized network, it's open source, no single party controls it, it's free from censorship and free from centralized control. No government or country can shut it down or alter it at its own will, right? That's very important. And the second trait is that Bitcoin, as most of you know, that has a fixed supply of 21 million Bitcoin, which is going to be depleted. So the last Bitcoin is going to be mined in 2040, which is not very far in the future. And that is a monetary policy hard coded in Bitcoin, right? So nobody can change it. The world currently we live in is in an age of inflation. Like it or not, the real inflation is way higher than many central banks' long-standing inflation targets. And so that's why we see Paul Tudor Jones shared earlier that he holds 2% of his portfolio in Bitcoin, and he wants to get to 5% in gold, 5% in Bitcoin, 5% in cash, and 5% in commodities. And also, I think his view is echoed by Ray Dalio, who recently admitted that he prefers to hold Bitcoin than bonds in this market. So another important trait is that it is very unique to this virtual commodity is that compared to other commodity, right? This is Bitcoin is a digital or other cryptocurrency is a digital era creature, and it has a network effect like many digital era inventions such as internet or social network sites. Right, the more people using it makes the wider adoption and makes the network more valuable. So that's also an interesting trait of this virtual commodity. And the last, of course, is utility. It has to be of some use, right? So one of the major benefits of Bitcoin is its ability to quickly transfer large amounts of value worldwide without the need of intermediaries, right? So while it can be relatively expensive to spend a small amount of Bitcoin due to fees, it's also possible to send millions of dollars cheaply. So you can see, like, for example, a Bitcoin transaction worth like 50 million US dollars sent with a fee of less than $50, right? That's quite a recent example, right? And takes less than 10 minutes. So that's its unique usability, like utility. Well, Bitcoin isn't the only network that makes this possible, but it's still the largest and safest and also most popular one, right? And also Bitcoin have something called a Lightning Network, which is a layer 2 solution built on top of the Bitcoin first layer. And that Lightning Network is to make small transactions possible and very cheap. So regardless of the amount, Bitcoin would make it possible to make borderless transactions, and that's certainly valuable. And if you look at Ethereum, there are much wider like user cases there, right? Ethereum and the decentralized applications built on top of Ethereum unfold various use cases such as payments, lending and borrowing, trading, and NFT, which stands for non-fungible tokens, issuance of assets, for example, or even like STO, security tokens, etc., etc. And people are creating products and services on chain in a similar pace as the way we see how software and internet companies build and prosper decades ago, right? If not faster. I think there's a couple of other key price drivers for cryptocurrency, which definitely is institutional adoption. We have seen banks, we have seen exchanges, and also like more traditional financial players trying to provide services or participate into this market. And we definitely have in the past 2 years seen a very tightened regulation and also a progressive approach towards taxation, which is create some short-term pressure, but in the long term, it's good for the benefit. It is going to benefit this asset class to be more included in our incumbent financial network system. And also recently we have seen some like 401k, which is retirement, the US individual retirement account providers providing like you can invest up to 5% of your 401k in cryptocurrency, right? And we all know that like 401k market is a huge market. It's a $22 trillion market, right? So imagine like other providers also start to do the same. That means a very big potential demand from that perspective. Next slide. Yeah, so this is some of the basically a short summary to summarize what is the Bitcoin market looks like now, and the market cap for Bitcoin and the daily trading volume, like futures spots combined, and also the realized volatility, average volatility per day, as well as the liquidity. Actually, if you want to buy like 100k US dollar worth of crypto, the spread actually very, very, very narrow, right? So it's one of the most liquid assets in the world that trade 24/7. Next slide. Yeah, and this one shows you the realized volatility of Bitcoin as well as Ethereum. And as you can see, the realized volatility is still very high. It's like close to 100 for these two assets, right? So which is make it a very tradable asset. You have plenty chances to buy low and sell high. And if you are selling options and to collect the premiums, as long as you don't go for very risky strike prices, you should get a pretty decent annualized return by collecting the premiums. Keep selling the options, because the volatility is just very high, so it's very attractive to do that. Next slide. Yeah, and so this things put things into perspective. So how big is crypto Bitcoin in relation to some of other well-known like household names that we know, right? So Bitcoin now is like 600 billion, and then as we can see that silver is 1.4 trillion and gold is 11.3 trillion. And so we already see like Bitcoin move up the ranks over the past 1 year. So I think before, in the next 2 or 3 years, the rank could change quite a lot. So we can keep track of it. If you're interested in keep track, I can share you the website who constantly like monitor all these changes. Next slide. Yeah, this is a very interesting chart that I like to share. So basically, this is the survey done by Charles Schwab, which is done by Charles Schwab, and it basically surveyed like the IRA accounts of a lot of Americans, and basically to find out that what their popular choices are in terms of investments across different age groups. So if you look at the millenniums, actually you can see all the top 4 names are those 4 names, and then the 5th one is actually called Grayscale Bitcoin Trust. So actually that means it's for the millenniums, it's already quite common or quite popular to put cryptocurrency alongside the other like popular tech stocks they own, right? And probably over the years, it's going to move up the ladder as well, right? Next slide. Yeah. So this chart is a summary of basically I got from the website called DeFi House. So it basically I think you probably heard of what DeFi is. So DeFi stands for Decentralized Finance, and this value on the left called Total Value Locked will basically represent the size of the DeFi world. It's like the AUM that locked in the DeFi smart contract. So this chart was updated a few weeks ago. Now I think it's bigger than this now. It's 65 billion as of today, which actually compared to the data from 1 year ago actually grew 30 times. So it grew 30 times over the course of last 12 months, right? And also on the decentralized finance, we have recently seen there has been 150 million unique Ethereum addresses being created on DeFi, which stand for the representation of the user demand on that's actually on DeFi. So what is DeFi? What is decentralized finance? So actually the term decentralized finance covers financial services carried out on a blockchain. So it involves taking some traditional elements of the financial system and replace the middleman with a smart contract. So for DeFi to work, it needs a decentralized infrastructure to run on. This is where the Ethereum blockchain come into play. So most of the DeFi protocols are built on Ethereum today, but there are also some competing like chains trying to take market share from Ethereum. There are also like DeFi projects built on, for example, BSC, Polkadot, Polygon, and Solana, some other chains, right? But as of today, Ethereum is still the most popular infrastructure that DeFi DApps got built on. So what are the popular DeFi services out there? The biggest DeFi user case is lending and borrowing. Actually, 50% of the DeFi's market share is taken by the protocols that does lending and borrowing. So later I'm going to give you one example. And the second place is taken by application that does the exchange. So it's called the DEX, decentralized exchange. So basically help you to exchange from one asset to another. Just like centralized exchange, but this service is built on chain, right? So the decentralized exchange takes around 35% of the market share in DeFi, and the rest of like 15% of market share is taken by some other DeFi applications, such as derivatives trading, prediction markets, like NFT, which stands for non-fungible token, which as of today mostly are art pieces, digital art pieces, payments, synthetic assets, and insurances. As you can see, a lot of these are basically trying to renovate, revolutionize the way we are doing some of these financial services in the centralized way. So it get copied and reinvented on the blockchain, and basically made possible by DeFi by writing different smart contracts. So that's what I say. We're actually seeing that the parallel financial market being built on blockchain with all this initiative, and it's only happened in the past like 2-3 years. All this really happened quite recently, but as you can see, last year the entire market of DeFi has grown 30 times. I mean, in the future, it's probably going to be continue this exponential growth. So over time, I think the size and the amount of value that got transacted in this way is going to be more significant until a point where it's going to be alternative, really alternative solution of how people use or get access to financial services. So speaking of
interrupting, Cynthia, but 2 minutes question time, if that's okay with you.
Yeah, sure. I think 2 minutes, right? So so I think just to summarize, I have given some example here. Like one is a popular lending and borrowing DeFi project called the Compound. Basically, it allows a borrower to take loans and lender to provide loans through smart contracts, right? So I basically summarize how a simple transaction could happen here. So this is getting very popular. For example, you can stake your native cryptocurrency, for example, Ethereum, and you can borrow like DAI, which is a stable coin, and at the same time you can get a C token, CETH, which is a representation that you staking into this platform, and you can get your interest through the C token, CETH token. So this is basically a lending and borrowing in the real time, in the real world, made possible on chain. Next slide. Yeah, so the next slide is another example, which is the most popular decentralized exchange called Uniswap. So basically, it's built on Ethereum as well. It allows you to swap any token to another token, ERC20 token to another token. So it's made possible by providing to create something like a constant product market maker model, which like for example, asset A and asset B, basically the quantity of asset A and B always equal to K, so which is gives you this curve, and you can basically the price of the A and B is determined by the demand to transact according to this formula. So basically, let's say A and B start with 10 units in this pool, and a person wants to spend 1 unit of A for B. So basically, he's putting 1 unit of A in this pool, so it become 11, right? Well, take B out of it. So actually, because A times B always equal to K, so actually you can calculate what is amount of B it take out of the pool. So that is going to determine the price of the B. So this is how all these things made simple, because otherwise in the traditional centralized exchange, you will need a lot of market makers to make a market for a trading pair, right? For an asset to do the price discovery. But in the DeFi world, with this simplified market maker model, which is a formula essentially, you can basically supply the liquidity into the pool. Basically, anyone can do it, and anyone can take liquidity from it, which is made possible by a simple formula and the smart contract. So that's quite amazing. You can basically list any asset that you want to transact in a ERC20 format into the pool, and which is permissionless. Next slide. Yeah, so I guess to sum up, I think a lot of people want to understand like what we can do in crypto. So I summarize some of the approaches you can have when you invest or participate into crypto. So first is, of course, spot. You can buy and hold, right? And wait for the price to go higher. And second, that you can trade, right? Because we just share the volatility is very attractive. You can definitely make seize the opportunity to buy low and sell high. And the third is that you can get your yield through the lending, because the market currently is giving a relatively high yield compared to how you put the money in the bank. For example, in the bank probably pay you less than 1%, right? In crypto world, it's easily you get paid in stable coins 6 or to 8%, which is quite attractive. And options, as we just say, the underlying volatility is high, so you can make money by selling options over time, and you should accumulate a pretty decent premium. And also DeFi, we just explained through 2 examples that you can provide liquidity into the DeFi protocol and gain a yield. And also
Cynthia,
you can
forgive me, but I think we do need to move to the questions and answers. I'm delighted to say that your material's available, and I can tell you that we have had an outstanding set of questions come in, so your presentation has clearly spurred much interest. So I've got one here from Lucas Marsden Smedley, which says, what's your view on how crypto is being used by organized crime? Cryptocurrencies have led to a dramatic rise in ransomware attacks, etc., and facilitate a huge range of criminal finances.
I think I've recently seen some data that's actually compiled by an organization. I forgot the name, which actually I think probably chain analysis, the organization called chain analysis. So what they do is they do on-chain transaction monitoring. So basically they try to trace whether the transaction coming from some problematic like or risky, like basically like origins, right? So basically they already are technologies and service vendors available doing all that. Actually, for our services also integrate with some of these providers, like to be able to track whether those funds are clean or not. So the technology available in that regard. I think they recently launched a paper, like report, just to trace like how many of that transactions are actually from this counter-terrorist basically fund or money laundering or online gambling or human trafficking, whatever. All this, I think the percentage is probably less than 10%. So I think it's a myth that people still believe that's a major use case for crypto. I mean, yeah, it's a permissionless network, so everyone can use it. Of course, it's going to be used by good actors and bad actors. It's always bad actor there. But I think with on-chain monitoring system getting more and more powerful, and the way and the capability they can analyze and trace this problematic transactions is going to improve over time as well. So I think it's going to be eventually be part of similar to AML sort of a KYC FAFT sort of initiative. It's going to be able to fall under those initiatives as part of our efforts across regions and regulators to combat money laundering and CFT. Yeah.
Thank you very much, Cynthia. Dilip Dalal, who is like yourself up late in the evening in Mumbai, asks, will cryptocurrency replace coins and notes, meaning that will banks as intermediaries be going out of business?
I think we are talking about the 2 systems, right? There's one system which is called the fiat currency, which is basically essentially issued by governments and central banks and being issued according to their monetary policy, and backed actually by the taxation, right? Essentially, it's the currency, the fiat currency is a country's debt, right? So that's the definition of fiat currency. I do think that's always going to exist as long as a nation as a form of organization is always going to exist on planet. I do think like cryptocurrency is another form of currency which is super national, right? It's not issued backed by a single sovereign government's credibility. It is basically, as I just mentioned, is created by a trustless network and it's decentralized, distributed, So I don't think they are the same kind of creature. So I don't think one is going to eventually replace the other. I think they're both going to coexist. And I think the banks in the future, as they can process the fiat currency payment, whatever, trade finance, everything, they would, as cryptocurrency get more mainstream, they will find a way to provide services, financial services around this asset class as well, like how they service some of the other alternative asset class. So I do think, so to answer your question, I don't think one is going to replace the other. They're going to coexist. It's alternative to fiat currency, and the banks and the major financial institutions will find a way to handle and provide services for cryptocurrency as well in the future.
Thank you very much. Phil Williams asks, are you concerned about the huge amount of power used to mine the coins?
You mean the energy consumption, right?
Yeah.
The energy consumption.
Yep.
Yeah, I think cryptocurrency, I think is probably consuming. Correct me if I'm wrong, but I think roughly consume the power that a country like Denmark consume. Right, so that's not very huge, but it's not very small either. Right, so there's a lot of debates and discussions towards like should should Bitcoin consume that power? I think it's I think I mean we need to find the right benchmark, like reference to discuss this question and put things into context. I think the right benchmark is the current incumbent banking system, because cryptocurrency, especially Bitcoin, is providing alternative payment system, right? Which is function on a global scale. So it's going to consume some power in order to make sure it's a trustworthy and secure network, because it's rely on proof of work, which is going to solve problems and burn basically power to power the mining machines to solve that math problem, and eventually to make this system fair and robust and secure. So that's what is required to build and uphold this system. So compared to I think there was a report done by a Big Four auditing firm, which is to compare collectively how much energy bank actually use. I think that number is higher than the number that Bitcoin burns every day, every year. And also, we must note that a lot of the energy that Bitcoin uses is actually renewable energies. Actually, it's getting more and more green in terms of energy composition, because a lot of the energy used is hydropower and also natural gas. So a lot of this actually does not give a carbon print. And we are also seeing important initiatives in North America and also Asia trying to promote the green Bitcoin, which means that whatever carbon credit is going to produce through the process of mining is going to be neutralized by purchasing the carbon credit. So eventually, I think it's possible, in my personal opinion, that the Bitcoin could be a greener or could be a market carbon neutral asset even before like 2030, like before like banking system claim carbon neutral. So I think that I'm still quite hopeful of that. I think I'm seeing good initiatives that people are working towards this direction, including Tesla claiming that they want to put only green Bitcoin on their balance sheet, right? With all this ESG effort globally, especially for listed companies, I think this is going to happen.
Very good. Edwina Morton builds on the theme and says, Bitcoin may solve one problem, but it creates others that you've discussed, used extensively on the dark web, consumes huge amounts of electricity, makes public finances unstable potentially. Blockchain as a technology may have some good uses, but surely cryptocurrencies are a threat to stable government finances and hence to social solidarity and democratic stability, she suggests.
Yeah, I think I have partially answered some of this concerns.
I think the public finances point is probably
Yeah.
an interesting one, if you wouldn't mind picking up on it.
Yeah, thank you for the question. I think actually Bitcoin was born in a stage of financial crisis back in 2019, when basically the government is bailing out banks, and the central banks worldwide switch on to money printing mode. So as a consequence of that, actually, a lot of ordinary citizens' wealth has been diluted because of the inflation and the hype of the basically property price and basically the other assets, right? So I think that's the backdrop when Bitcoin was first invented, and the reason why last year when COVID-19 hits and the money printing got back in the way again globally, and you see basically a deja vu of what happened like 10 years ago. That's exactly when Bitcoin actually have seized the second wave of its like big adoption. Like people start to look at this value, realize the value that it provides, and mainstream institutions start to try to understand it or incorporate it into its plans. So I think it definitely is trying to. So the solution. So the value proposition of Bitcoin is to provide alternatives that you otherwise do not have, right? Because otherwise you do not have that way to preserve your wealth. If you only has one way, which is to hold the fiat currency. You cannot fight against those inflation, right? So I think cryptocurrency exactly, especially Bitcoin, was invented with the vision to provide alternative monetary system, monetary policy that no one can easily alter. So I personally, I do not think, depends on what side you take, right? I do not really think it's a threat, unless if you are standing from the perspective that believing that fiat currency is the only legitimate regime. I think if that's the assumption, then probably will get to that this conclusion. But if you're like me, that I do not believe that's only possible regime in this world, I do think there should be other alternative coexisting, which I do see Bitcoin or cryptocurrency as one of the viable system that exists on this world. Then I probably would not get to the same conclusion.
Very good, thank you. We're probably down to the last two or three questions. Cheryl Winter asks, what checks are there when you make a $50 million payment, which will avoid the normal checking of intermediaries? Isn't it laundered money?
Well, you mean what? Sorry, I missed the first half.
If you make a $50 million payment through Bitcoin channels, isn't that money laundering? Doesn't it avoid the normal intermediary checks?
I mean, this is what made possible, right, by the technology. I mean, I think whether it's money laundering or whether it's a payment with the right with the right cause and proof, that's another thing, right? I mean, it doesn't mean that if, for example, I can pay my supplier in cryptocurrency, if my supplier agree to receive that, I don't think that necessarily make it money laundering.
Thank you. Christopher Williams asks, how concerning are the fraud investigations into Tether and the attack on Binance in the US on BTC? What do you think of the risk of further anti-crypto moves by the PBOC?
Yeah, I think there's three questions. One is about the investigation in Tether. One is about the crackdown of mining or crypto activities in China. And the third is about Binance global sort of regulatory pressure, right? Yeah, let me take the question one by one. The first is about Tether. Tether is the earliest stablecoin, and also by far the largest stablecoin by market cap. So it always has been being a potential sort of how to say, there always has been discussions with the US regulators about the compliance status of this cryptocurrency stablecoin, especially when the investigation has been centered around like whether they have enough collaterals behind the in the reserve to support the issuance of the USDT. I think that's a valid investigation, because that is eventually going to determine whether this stablecoin is stable or not, right? And what is the worth of it. So I think that's super important, especially consider like USDT has become one of the most important infrastructure in the crypto world, and being used as the medium of transactions by many, right? So I think that definitely is a very valid question to ask. I do think there is potential risks coming out from the investigation, and the conclusion from this investigation of Tether. So I think this is not so I'm not the only one who have concern in that. I'm sure a lot of market practitioners, they also share the concern. That's why I think the more compliant and transparent stablecoin would have a market to grow, right? That's why actually in the last 2 years you have seen another other more compliant and transparent stablecoin like USDC and a few others, Paxo USD. They have been like gaining market share, especially USDC. People like it because it's more transparent, and the reserve is audited by one of the major auditing firms. So people feel more comfortable that with the issuance of USDC, they actually have the full 100% collateral behind it, which they can trust. So I do think this world is further scrutinizing those players that overlook the regulatory compliance part of it, and going to give chances of growth for those people who does better in that. So for sure, that's my answer to the first question. The second is about Binance global regulatory pressure. I do think that's going to happen. Actually, even before it happens, we feel that as cryptocurrency get to a certain stage, it's going to be more and more mainstream, and the regulators are going to look at the way that they regulate some of the other stuffs, right? So it's going to include the regulation into their existing regulatory framework. So that's where most of the collision is going to happen. I think what we see on Binance is just a manifest of that kind of collision, which is going to, I think, persist for the next few years until the moment where the regulators has fully incorporate this new asset class into the existing incumbent regulatory regime. I think that's, you're going to see similar things happen across the world.
Thank you very much,
won't be
Cynthia.
the only one. Yeah.
One final slightly cheeky question. You should feel free not to answer this question. But Donald McRae asks, do you personally own any cryptocurrency assets?
Oh, yes, I do.
Fantastic. Cynthia, that is absolutely outstanding. And thanks also to all our questioners. I'm sorry I couldn't get through all the questions, but they are truly outstanding. As well as, of course, Cynthia, we wouldn't be able to run this without our sponsors. So thank you very much to all our sponsors. And I refer you to upcoming events of similar quality and interest, which you can also find on the website, and I commend them all to you. So once more, with my profound thanks to Cynthia for an outstanding session, my thanks to the audience, and thank you for listening and such great questions. I will bring proceedings to a close, and I wish you a tremendous rest of the day, evening, night. Thank you so much. Goodbye for now.
Thank you for the questions, and thanks, Hugh, for having me.